My thought on those two is very much a personal preference. There is no extra information on the candlestick that there isn't on the bar chart, but there's a more immediate visual representation. If the movement from open to close is down, then it's red, and if the movement from open to close is up, then it's green. That more immediate visual representation is interesting and better presented by candlesticks. Some like it. Others take the view, and I think I do as well, that sometimes candlesticks can, insofar as they diminish the visual impact of the absolute high and the absolute low traded, but emphasize the open and the close, for some people they would like to have better emphasis on the highs and lows traded. And I am one of those, I think. Particularly on long-term charts, obviously, there's no need to know open and closes. Highs and lows are much more important. There is an argument for short-term charting to use the candlestick. Broadly speaking, the highs and lows are where you draw your trend lines and your supports and resistances, not from opens and closes. The reason why the candlestick emphasizes opens and closes is that they think that's a consensus move. Whatever volatility has happened during the day, there's a consensus move that this is where we will close the market. This is the equilibrium level when all our influences and anxieties have been worked out throughout the day. Against that, where the market is allowed to go in terms of highs and lows throughout the day is still very telling in terms of the psychology of the market. And some people do talk about closes as the more important level. I tend to use highs and lows as very indicative of where the market is. For example, when people say, oh, the market's ranging wildly and it's just, it shot up there, if there are enough bears in the market, it won't be allowed to shoot up there. So-called wild trading throughout the day is symptomatic of a psychology in the market which you need to know about as a chartist. I stick by highs and lows being the critical levels, both horizontal supports and resistances, as we'll see, or diagonals. Others will disagree in certain circumstances and say, no, the close is more important. It's a matter of judgment, like so much about charting.